I know you're not a fan of the president's constant bashing of the Fed and urging of easing, but you have been in the easing camp yourself. Do you think the case has strengthened or weakened in the last few weeks and months for the Fed to cut rates this week?
I think the case is probably stronger. Inflation really does appear quiescent. There's uncertainty about where the economy is going to go in the future. The risks of a cut seem to me to be lower than the risks of staying where we are and risking a tip into recession. So I think the Fed's gotten itself to a reasonable place with a 25 basis point cut and with the possibility of another 25 basis point cut. I thought the discussions of a 50 basis point cut are almost madness. That's the kind of thing you do in an emergency, which this is not.
Some of the criticism around cutting when the economy is relatively healthy, and in fact, inflation has at least firmed up a little. If you look at the preferred PCE, has centered around this idea of blowing bubbles, blowing asset bubbles in stocks and bonds, getting investors too reliant on easy policy for the Fed to just step in no matter what. I mean, how do you take some of those criticisms?
I think that's the right concern, but I think you have to look at the level of stock prices, for example, in the context of the level of interest rates. And once you do that, I think it's much less likely and obvious that we're in some kind of large-scale bubble. If I look across the range of assets, this doesn't seem to me to be a moment like the middle of the last decade was in housing prices, or like 1999 was in stock prices, where by any valuation measure, they looked to be overvalued. We'll have to see when all earnings are in. But I think that a lot of the strength in stock prices reflects strength in earnings and reflects expectations of low interest rates rather than representing some kind of bubble.
Larry, are you expecting this war over the dollar and attempts to weaken the dollar to get more obvious, more overt in the coming year?
I hope not. I think there's a risk of it. I think when you signal that you don't want your currency to be strong, when you trash your own currency for competitiveness, you raise the borrowing costs for every American homeowner and for every American company. And so I think it's something that operates to make the economy less competitive, less efficient, not more competitive and more efficient. As we always used to say when I was at the Treasury, no nation can devalue its way to prosperity. That's ultimately about the quality of its institutions, the hard work of its workers, the entrepreneurship of its businesses, and those are the fundamental things we should be trying to foster.
Meantime, on the Fed, President Trump just upping the ante in his fight with the Federal Reserve. Earlier this hour, Secretary Summers, we talked to Mark Short. He's the chief of staff for VP Mike Pence. Here's what he said about why the Fed should be cutting right now.
In our mind, the Fed should be focused on inflation, and there's not been evidence of inflation. We know that what happened throughout the 1970s, 80s, 90s was an adaptation to the Phillips curve and believing that when you began to see employment increase, that necessarily inflation would follow. So therefore, the Fed wanted to get ahead of that. We're enjoying record numbers of unemployment at 3.7%, the lowest in 50 years. But there has not been inflation that's followed that. And so we think the Fed should be focused on the inflation part.
I mean, it sounds like you agree with him ultimately, but to hear the message over and over and over again out of the White House, how do you think that will ultimately impact decision-making?
Let me ask you, why does it mark us as a serious country for the White House chief of staff or the vice president's chief of staff, who used to be the head of White House legislative affairs, to be giving us disquisitions on monetary policy? It never occurred to me when I worked in the White House on economic policy to discourse on legislative strategy or the vice president's political strategy. This kind of thing, this idea that expertise doesn't matter, everybody talks about every subject, that you can just wish what will turn out to be true, is not the mark of a government governed by reason. And I think that's a very troubling thing. Yeah, I think the Fed's doing the right thing now, but I think the idea that directives for the Fed or running Fed commentary should come from the vice president's chief of staff, I think is a bizarre descent for American democracy.
Do you think that there's a risk right now that the market is going to think that the Fed is doing what the president wants, and that's a serious issue with consequences that risk its credibility?
Well, I put it slightly differently. The most important thing that any financial policymaker has is their credibility. And if that credibility is sacrificed and their decisions are seen as not based on the facts of the economy, but on political pressure, then something hugely important that may be essential when the next crisis comes is lost. And that's what Jay Powell has to weigh every day because of what the president is doing. He wants to do the right thing, and he wants to preserve his reputation for independence. And when the president's random walk through opinions happens to land on one he agrees with, he's in a very difficult put in a very difficult position. So I think what the president is doing is profoundly irresponsible, and I don't think it's less irresponsible because at this particular moment I happen to agree on the desirability of a modest easing.
To that point, Larry, who would you say is pressuring Powell more? The president with his badgering, or just Frankfurt and Japan and the divergence in U.S. rates from global rates?
I don't think he's being badgered by the latter at all. I think he's being egregiously badgered by the president in a very complicated international situation and a domestic situation that has complexity given the length of the expansion and given some signs of slowing. I might just say, by the way, that if we didn't have the trade war, if we hadn't administered the sugar high to the economy with the deficit busting but economy stagnating tax cuts of 2018, the Fed would have a much simpler job. It's been greatly complicated by the policy errors of the president and his administration.
Well, we know you've been critical of the fiscal policy out of the administration. Just on trade, Secretary Summers, we did get a trade outline from Senator Elizabeth Warren, and it feels like it's even more restrictive and protectionist than what we're seeing out of the Trump administration. Not so much on tariffs, but in terms of all the different milestones countries need to meet, especially on labor and climate, to make a trade agreement with the U.S. Are the Obama days of Democrats making multilateral trade deals done? Is this just a new regime in terms of how we're going to approach trade from this country, from both parties?
Look, I think all of us, certainly who were in the Obama administration, recognized that we were going to have to fashion trade agreements that paid more attention to Main Street and less to Wall Street, that were more about people from Detroit than they were about people who gathered in Davos. But I have to say I was quite troubled by the approach that a few in Democratic primaries are taking of essentially emulating the president's policy except making them more imperialist in terms of the number of demands we're making of other countries to conform to various of our practices. I looked at Senator Warren's list, and there were a variety of them that the United States was not currently in compliance with. And while frankly I'd like to see the United States get in compliance, I don't think that a strategy of abrogating your trade agreements with people on that many grounds is a way to be seen as a reliable partner. The United States has derived enormous benefit over the last number of decades from being seen as a reliable partner for countries at moments when, frankly, China and Russia often gave them reasons for distrust. If we start matching that with our own hyper-aggressive policies, we are going to lose allies from whom we gain a great deal.